Stop leaving your money in savings. Let me ask you something. If your bank is giving you 3% per year in your savings and inflation is well over 20%, my question to you is, are you really saving money or losing it quietly? Now, here are interesting parts. Right now, there are investments that paying 18%, 20%, and even above 20%, and they are still considered low risk. Also remember that not everything that pays 20% is safe. But in this video, I will show you where the real 20% returns are coming from, which one are considered low risk, and how to avoid falling for fake high yield trap. First and foremost, let's clear something up. In developed country of the world, 20% low risk does not exist. Let's agree with that. But in emerging market like Nigeria and some part of Africa, when interest rates are high and inflation is high, money market instrument can cut across 20%. Ask me why. Because the central bank raises rates to fight inflation. And when rate goes up, short-term investment pay more. So let me quickly mention a few investment options where you can keep your money instead of you putting it in savings. Option number one is treasury bill. Treasury bill is one of the safest investment you can make because you are lending money to government itself. Treasury bill is usually a short term, which is within 91 days, 182 days, and 364 days, which is 1 year. So when interest rates are tight, yield can move above 20%. Let's say you invest 1 million for 1 year, and 200,000 return. No trading, no stress, no checking charts every day. It is low risk because it is an instrument that government back up. That is why it is considered very low risk. The investment option number two is money market mutual fund. This is where most smart investors pack short-term cash. Instead of buying treasury bill yourself, a professional fund manager pool money for investors and invest in treasury bill, in commercial paper, in short-term government security. So because rates are high, some money market fund yield 18 to 22% annualized. That is within 1 year. The beauty of this is you can start with smaller amounts. It is professionally managed and withdraw easily for business owner. It is powerful. Instead of keeping idle capital in that saving that they are giving you 2 to 4%, you should allow it to work in the money market fund, which is more reliable and in its low risk. Investment option number three, instead of you putting your money in saving, is commercial papers. This is a short-term lending to strong companies. Big, reputable companies borrow money for 3 to 9 months and offer high interest rates. Because corporate borrowing costs rise when rates goes up, yield can cross 22%. But here is the key. Not every company is safe. This is low risk only when the company is financially strong, and also when the company it is properly rated, when it goes through a trusted investment house. Don't chase unknown name promising crazy returns. Now, listen carefully. Low risk does not mean no risk, and 20% is not guaranteed forever. These returns are high because number one, inflation is high. Number two, because interest rates are high. And also, liquidity is tight. If rate drops next year, this yield will drop too. If someone promises guaranteed 30% monthly, that is not money market. That is a red flag. So you must be watchful. Like this simple strategy, when it is emerging fund, money market fund is inappropriate. When it is short-term savings, less than 1 year, you could as well use treasury bill. Now, when you have excess business cash, high yield money market, this keep your capital safe while still beating inflation. At least your money is still there and it is there, it is not reducing, rather it is increasing. It can still meet up with inflation. Remember that money market is not for getting rich fast. It is for protecting your capital, preserving liquidity, earning decent returns safely. I want you to know that smart money is usually boring. It is not loud. It is not flashy. It does not promise overnight wealth. But what? It compounds quietly. See you in my next video when I will share more on several types of money markets. If you found this helpful, kindly subscribe and drop a comment and tell me if you are still leaving your money in saving at 3%. Let's move to where smart money people back cash. See you in my next video.